Warren Buffett is one of the greatest investors to ever live, and his company Berkshire Hathaway just released their latest quarterly earnings, and it showed that the company was a net buyer of equities during the past quarter, and Berkshire spent over $9 billion on stocks during the last 90 days. So in this episode, we're going to take a look at their latest quarterly report, go over all their most recent buys and sells, and discuss the companies that Buffett has been piling cash into over Q3 of 2022. But before we do that, I am going to ask you to hit the like button and subscribe. I'm the Gen Z investor, and on this channel we talk about the stock market, go over any major market news, and we track the progress on my personal portfolio, which is now at a value of $166,000. So if you like investing content, please hit that like button and subscribe. And of course, in today's video, we're going to focus on the Oracle of Omaha, one of the greatest investors to ever live, and all the recent changes he's made in his public equity portfolio worth over $300 billion. So if you're unaware, Warren Buffett's company is named Berkshire Hathaway. He's been chairman and CEO for over 50 years, and this is one of the largest companies in the world. Taking a look at the S&P 500, Berkshire Hathaway is actually the fifth largest holding within the overall index. It's worth over $650 billion and only trails the companies of Apple, Microsoft, Amazon, and Google. So it's the fifth largest company in the S&P 500, and this is a major conglomerate of a bunch of different underlying companies. So essentially what Buffett has done over the past 5 decades is build the world's largest holding company. He owns dozens of brands from multiple different sectors, and he has a combination of wholly owned subsidiaries where Berkshire Hathaway owns 100% of the company's operations, as well as a large public equity portfolio where he holds everyday stocks that you and I could buy as well. And if we take a look at his wholly owned subsidiary portfolio, it includes some household brands including Benjamin Moore, Dairy Queen, Duracell Batteries, Geico Insurance, Fruit of the Loom Clothing, and many more. So he has a large portfolio of wholly owned subsidiaries. These are private companies owned 100% by Berkshire Hathaway, as well as a public equity portfolio that we're going to focus on in this video. So like we saw, Buffett was a net buyer in the quarter, spending over $9 billion on stocks, and we're going to take a look at how his company performed during the past 90 days. And if we take a quick look at their earnings report, in the third quarter of 2022, the revenue from their insurance and other businesses, including their public equity portfolio, so the interest, dividend, and other investment income, totaled $62.7 billion. And then from their railroad, utilities, and energy industries, they generated another $14 billion of total revenue, meaning overall, Berkshire Hathaway generated just under $77 billion of total revenue in the quarter, which was up 9% over the same quarter in 2021. And if we take a look at the first 9 months in this fiscal year, they generated $224 billion of total sales. Again, another decent increase over the prior year's 9 months of only $204 billion. So Berkshire Hathaway, like we saw, the fifth largest company in the S&P 500, an absolutely massive conglomerate generating hundreds of billion dollars of revenue each and every year, and that total revenue number continues to grow. So overall, a strong quarter from the company, and now we're going to take a look at the recent buys and sells in their public equity portfolio. So Warren Buffett's Berkshire Hathaway bought shares of Taiwan Semiconductor for the first time during the third quarter bear market, while dumping shares of Store Capital entirely. So to start off, the selling off of Store Capital is not a major surprise. This company made up only a fraction of a percent of the public equity portfolio. It was a very, very small holding. So overall, Buffett dumping Store Capital entirely is not a big shock to me. The company's operations have changed significantly over the past few years, and I understand the sell. But a major addition to the portfolio was Taiwan Semiconductor. For the first time Buffett has purchased this company, it was not in the portfolio before this quarter. And he made a major purchase, buying 60 million shares of the company worth $4.1 billion. So that's a significant holding for Berkshire Hathaway. Yes, their overall public equity portfolio is worth over $300 billion, but a $4.1 billion purchase makes Taiwan Semiconductor the 10th largest company in this portfolio in one single quarter. So this was a major purchase by Buffett. Historically, what he's like to do is create an opening position in a company and then continuously add more and more to that position quarter over quarter. And we've seen that trading history with 2 of his latest purchases in Chevron and Occidental Petroleum. So he started a position in these companies just a few years ago and continuously adds to them each and every quarter as well. And what we've seen with these 2 holdings is in the last quarter, he did buy more shares, so his trend of buying these oil giants has continued. he added 2% to his position in Chevron, so not a major increase, but he was still a net buyer of the company in the quarter, boosting that stake to the third largest holding in the portfolio with a value of over $23.7 billion. And overall, he owns 8.4% of Chevron. And then Occidental Petroleum, he added a 22% increase to this position, buying over 35 million more shares, and he now owns 20.7% of the company as a whole, making Berkshire Hathaway the largest individual shareholder in the company. So overall, that was the biggest news in terms of buys in Buffett's top 10 holdings. We're going to go over TSM more in depth later on in the video. He added a small increase to his Chevron position and a decent sized increase to his Oxy position as well. The one sell he made in his top 10 holdings was he trimmed his position in Activision Blizzard by 12%, selling off 8.2 million shares of the company. So not a major decrease, and Buffett already admitted that this play was an arbitrage bet that the actual acquisition by Microsoft goes through, and because Buffett bought in 30% below the Activision Blizzard buyout price, he plans to make 30% overall if this company actually gets sold to Microsoft and the deal goes through, and the company closes at that higher price, so a slight trim is nothing major for the company. If we take a look at the other news in the quarter, they also added 2 new positions in Louisiana Pacific and Jefferies Financial Group, but these were very small. They only added 5.8 million shares of Louisiana Pacific, worth just under 300 million, and they purchased 433,000 shares of Jefferies Financial Group, worth only 12.8 million. So although these were 2 new additions to their portfolio, I really doubt that Buffett actually made these buys himself. Buffett has other lieutenants that work under him that have access to a couple $1 billion of capital to buy and sell with, and these 2 purchases, due to the nature and the size of them being very small relative to Buffett's overall buying power, I don't actually think Buffett made these positions himself. I think 2 of his trusted lieutenants bought these companies in the latest quarter. And a couple other things he's done is he added to his stake in Paramount Global by 16%, bought more Restoration Hardware, adding to that position by 8%, and also Celanese, adding 6% to that holding as well. Again, very small positions in the overall portfolio, and we're not even too certain that Buffett himself added to these positions in the quarter or if these were his employees. And he also exited some positions. He cut US Bancorp by 55%. He exited Bank of New York Mellon by 14%. Like we saw, he's trimmed his position in Activision Blizzard. I do think that was Buffett himself just because of the size of that position in the portfolio as a whole. And General Motors, he trimmed by 5%, and Kroger by another 4%. So overall, he was trimming out some of the smaller positions. We don't exactly know why. He didn't really talk about in the latest quarterly earnings, but a 4% trim to Kroger, a 5% to GM, nothing too newsworthy overall. And in the latest quarter, Buffett did buy back $1 billion of shares, which is a good sign because during the latest 2 quarters before this one, Buffett really wasn't buying back any more stock. He had major stock buybacks throughout 2021, but that has significantly slowed down over this calendar year. And now we're going to focus and jump back into Taiwan Semiconductor, the major position Buffett added during the latest quarter, in by far the biggest headline and the biggest addition to Berkshire Hathaway. So if we take a look at ticker TSM, they currently trade for $82 per share, and the company's sitting on the lower end of the 52-week range with a very reasonable forward PE ratio of 12.8, a current dividend yield at 12.2%, and this is a massive company worth just over $400 billion. We can see over the past 5 years, the share price has grown by over 93%, but on the 1-year chart, they are still down by over 33%, so Buffett bought in at a great time, buying the dip in a major semiconductor player. And if we take a look, why I believe Buffett purchased this company is because of how connected Taiwan Semi is to Apple, the largest company in his portfolio and one of the 4 pillars of Berkshire Hathaway. So this company within Berkshire Hathaway is worth $123 billion, and Buffett owns just under 5.5% of Apple as a whole. So I do believe the fact that Taiwan Semi is a major chip producer for Apple was the driving force that led to this Buffett purchase. I think Buffett was looking for a larger stake in Apple's vertical integration. So if you buy Taiwan Semi, you stand to profit from the actual manufacturing of the chip, and then he also profits by Apple selling that chip in a device to the end consumer. So now Buffett's going to profit from the entire process of chip manufacturing to that product then being sold to the end consumer directly by Apple. So as a Berkshire Hathaway shareholder, you're getting the best of both worlds, and you pretty much own all of Apple's vertical integration by this purchase in Taiwan Semi. So another thing I want to understand with this company is they have solid fundamentals as well, which I think made them an attractive purchase to Buffett. Buffett likes buying companies with fortress balance sheets and continuous revenue generation, and that is exactly what Taiwan Semi has. The company's largest customer in Apple just announced that they plan to use Taiwan Semi's chips in their latest generation's iPhones and Macs going forward, And as well, the companies were negotiating in prices, and although Apple first came out and said they will not accept a chip price increase from TSM, they reportedly agreed to a higher chip price after the negotiations continued. So not only is Apple saying they're going to use TSM going forward for their latest iPhones and Macs, TSM also demanded a price increase and Apple obliged, which is a great sign for TSM shareholders. So if we take a look at the company's investor relations, they've posted some incredible financial results over the past few decades. They consistently deliver great revenue growth, growing the top line at a CAGR of 17.5%, and their earnings have grown by over 17% every single year on average since 1994. So for over 20 consecutive years, the company continues to deliver very strong financial results. And if we take a look, their revenue CAGR going forward from 2021 through 2026 is projected to be 15 to 20%, so sticking right around the 17.5% annual growth, and their gross margin to be over 53% as well. And the company also has a fortress of a balance sheet, which we're going to take a look at, and they have the industry's highest credit ratings from S&P and Moody's. And as well with Taiwan Semi, they've relied only on internally generated funds to finance their organic growth, meaning the company makes enough money that they can reinvest in research and development, expand their manufacturing, all with the funds they generate through cash flow and net income, and they don't have to seek out debt in order to grow their business. And if we take a look at their balance sheet, they're in a very healthy financial position. As of the latest report, they had over $47.7 billion of cash on the balance sheet. $47 billion in cash is an absolutely major cash pile. And if we take a look, their total current assets are only $63 billion, and only $6 billion of that is tied into inventory. So they have very liquid current assets, which is a great sign for their business. And if we take a look at the total assets as a whole, this company has very little goodwill and very little intangibles. Less than $1 billion of soft assets on the balance sheet, with over $145 billion in total. Meaning this company has around $145 billion of total hard assets on the balance sheet, which is a great sign. You can't sell goodwill or intangibles for money. So when companies have large balances in this account, you pretty much want to subtract that to determine the hard assets on the books. And TSM has very minimal intangible assets, which for a potential investor is a great sign. And if we take a look at the debt side of their balance sheet, their total current liabilities represent $25 billion, but when you have cash at over $47 billion, these current liabilities over the next 12 months are very minimal, and their current ratio is over 2. And if we take a look at the long-term side of their balance sheet, total debt for the entire business comes in at just below $60 billion, meaning their current assets alone of $63 billion, so the assets available over the next 12 months can cover all the debt on the balance sheet right now. And with $47 billion of cash relative to only $60 billion of debt, this company is in a very strong financial position, and I'm not worried about their debt level whatsoever. And if we take a look at the book value per share, continues to grow over the long term, and the tangible book value sits at $85 billion. So overall, the company has a fortress balance sheet, very healthy financial position, and I do understand why this was an attractive purchase for Buffett in the latest quarter. So now I'm going to wrap up the video. I want to thank you for watching all the way to the end. In this episode, of course, we took a look at all the major buys and sells Buffett made in his portfolio during the third quarter of 2022. So if you already haven't done so, hit that like button down below, subscribe for future videos, and I will see you in the next one.